Hello, and welcome to our Market Alert video for today, which is February 16, 2024. I am Ken Morait. I'm the founder and CEO of Retirement Planners of America, and we have a singular goal, which is to create as many Squippers as we possibly can. And if you don't know what a Squipper is the acronym for Second Childhood Without Parental Supervision. When one of our clients retires, we call them a Squipper, and they join Squipper Nation. So our website is rpoa.com, and you can check us out. So let's talk about what happened this week. Well, actually, I want to dive into what happened this week. But before I do, I want to share with you, I guess, a philosophical moment, which is that tomorrow is promised to no one. And it's good news, but I'm going to say it's couched in bad news, or bad news couched in good news, depending on how you look at it. We have a dog. Her name is Noodle, and Noodle is a poodle schnauzer mix. So she's a schnoodle. So we named her Noodle the Schnoodle. And she's a big girl. She's 75 pounds. She's 6 years old, ton of energy. She's a giant puppy, and she's loving. She's affectionate. She's very gentle. With little kids and little dogs. She's just a wonderful dog, the best dog we've ever had. And on Super Bowl Sunday night at 3 o'clock in the morning, my wife, that day, Noodle had not eaten anything. She didn't drink anything. She was listless. She had no energy. She just wasn't herself. And so Faye, my wife, at 3 o'clock in the morning said, "Ken, I'm taking Noodle to the emergency room." And I was like, "Whoa, the emergency room?" She goes, "Yeah, I think there's something wrong with her, and I think she needs to be checked out." Well, thank goodness she did that. She took her to the emergency room, and literally Noodle's heart failed at the hospital. They had to resuscitate her. If Faye had not taken Noodle to the emergency room, she would have died that night. And, like I said, tomorrow is promised to no one. Things can change in the blink of an eye, can't they? Well, it turns out she has Addison's disease, which is a hormone deficiency. And so the good news is that if we give her a shot every 4 weeks for the rest of her life of hormones, that she will live a normal, happy life. I don't know. Noodle is stronger than me. I mean, she's a big dog. I don't know how we're going to wrestle her down so as to give her a shot every 4 weeks. I need to YouTube that one or something. So anyway, thank goodness Noodle's going to be okay. I want to go over with you what happened this week. So we got the inflation data, and it came in hotter than people expected, even hotter than we thought. We thought finally that inflation would have a 2 in front of it, but it didn't. It was 3.1. And on the day of that news, there was a huge market sell-off, both stocks and bonds. It's like, oh no, it's the end of the world. But then the following day, it was like, well, wait a second. Inflation was 3.4. It's now 3.1. It's going down. Oh, maybe we shouldn't have sold. So a bunch of people bought back, and the market has gone up pretty much every day since then. So the narrative continues, which is what we believe, and that is that in the second half of this year, the Federal Reserve is going to lower interest rates. And if they do, that will bode well for both stocks and bonds. So this year could be a year that's kind of unusual, which is that you have stocks and bonds moving in the same direction. They're supposed to be like a diversifier, right? They're supposed to go in different directions, but it looks like this year is going to be one where they move in the same direction. And this week is an example of that. They both went up and down at the same time. Why? Well, because if inflation is coming down as we expect it to be, and the Fed does lower interest rates in the second half of this year, then that helps out the consumer tremendously. Lower interest rates, lower inflation, more purchasing power, buying cars, buying houses, buying stuff. And if the consumer buys stuff, profits go up, stocks follow. And our view is that that's a very good thing for the stock market. So why is it good for the bond market? Well, as we've chronicled for you, we've told you over the last 3 years, in fact, as bonds have been behaving badly, and now they're starting to behave better. That as interest rates go up, bond values go down, and as interest rates go down, bond values tend to go up. So if the Fed lowers interest rates later on this year, the bonds should benefit from that. They've been through the worst bear market perhaps in history. And for those of you who followed this video, we told you in April of 2022 to sell all your bonds, get out, don't stay in that. And bonds had the worst bear market since recorded history, according to Bloomberg. So that was a very good move to avoid all of that. But we got back in December. We think that this year is going to be very strong for bonds. So like I said, it's going to be a year, in our view, where stocks and bonds move in the same way. And we think by the end of this year, higher than where they are today. Now, having said all of that, it is our view that you should be fully invested right now, no question. But we also believe you should have always a protection strategy. Our firm, Retirement Planners of America, we work with people who are over 50, who are retired or retiring soon. So if that's you, if you're within 5 years of your retirement or in the first 5 years of your retirement, we believe that decade is the single most important decade of your entire financial life. And protecting your principal during that decade, we believe, is paramount. It is job number one, because if you lose tons of money in a big bad bear market, then what happens is your ability to retire could be impaired. Your ability to stay retired could be disastrous. It could all not work out well for you. And our goal is for your money to last as long as you do. We want you to go out there and enjoy your second childhood, have peace of mind. And if your money is losing, if it's falling like a stone, that's hard to do. So our investment protect strategy actually has told us to sell in November of 2007, before the 2008 market crash. It told us to sell in March of 2020, literally the day before the pandemic was announced, and in April of 22 also. And of course, that's when the big inflation bear market came. So we want to protect your money as a client of ours from big bad bear markets. That's why we have our invest and protect strategy. Now, our view of this year is it's going to be a positive year. The market's going to go up, bonds are going to go up. We think it's going to be positive, but we don't know that. We have no guarantees. So what we do is we plan for the worst and we hope for the best. We don't do the opposite. We don't plan for the best and hope the worst doesn't happen. That's not very prudent in our view. So if that resonates with you, if you are over 50, retired, retiring soon, then check us out. Go to our website. It's on this side, rpoa.com. So thank you for watching this video. I hope you are well. I hope you are healthy, wealthy, and wise, and that all is going the best it can for you. Share this video with as many of your friends and family as you possibly can. We want to create, as I said, as many squippers as we possibly can. We want everybody to be out there squippering their tails off. That's the best thing ever. So thanks for watching, and we'll talk soon.